reiterating it again, and now we'll get some perspective. What I'm talking about is Sebi's proposed move to perhaps overhaul the F&O market regulations a little bit. What happened was, just to recap, was that over the weekend, Sebi put out a discussion paper. It's a consultation paper right now, where Sebi is saying that basically there needs to be a relook into the criteria that governs how stocks are included in the derivative segment, the futures and options segment. Now, Sebi's contention is that this criteria was last updated back in 2018. It's been a while. The market has really evolved. Of course, the trading volumes have shot through the roof. So there's a need, perhaps, to strengthen the guardrails once again. Now, there is a proposal that's come through. We'll discuss that with our guests. It's tweaking quite a few parameters like market-wide position limits, etc. And if you go by this proposal, if this is indeed what becomes the new rule, then several stocks could go out, but several new stocks would come into the F&O market as well. So we'll discuss this bit by bit. And to help us navigate it, we have with us Moin Ladha, partner at Khaitan Co. Moin, thank you so much for taking this call. So let's get your first view, because this is right now a draft, but it is looking to change a lot of the definitions. I think a lot of the thresholds will move higher. As I said, market-wide limits, etc., the turnover. What did you make of this consultation paper?
No, I think, as you rightly mentioned, it was in 2018 when the guidelines were last looked at. So it is timely, given the COVID pandemic time, how the markets have really evolved. So it's timely that there's a relook being done. There are a few conditions and, quite technical points, but broadly, what's being looked at is that what is the volume and what is the underlying. So long as the volume and the investor participation is good, you are continuing to be eligible. And I think in one way, it's going to also expand the opportunity. So there's a twofold impact I think it will have. One is that the guardrails will ensure that the segment cannot be used for manipulation in low volume stocks. Also, what it will ensure that new age companies who now meet these thresholds, who have good volume over the last few months, will now be able to get entry into this segment. So that's really how I'm looking at it in terms of the current proposal. Now, how effective this is really going to be, that will really need to be tested, and the real shape of the regulation will have to be seen, because as you mentioned, this is still a proposal.
Joining in, and that's the point I was going to get to, what you just mentioned about how effective is it going to be, because if the guardrails go up, now if I remember correctly, in 2018 there were around 209 stocks that were in the F&O space. As of March 31st this year, there were around 182. So the number in the last 6 years, despite the market having evolved, the stocks have come down. Now, if these draft measures are put in place, then more stocks that go out of the F&O segment and more come in. But is this a way to ensure that, okay, fewer stocks, very well, but just to ensure that there is not enough manipulation, as you were just mentioning?
I don't know if it is fewer stocks only, while that could be one impact. The idea is to ensure that there is a limit to manipulation, and I think we've seen that trend. The regulator is having zero tolerance to non-compliance. We've seen slow and steady steps being taken, to initiate adjudication to make the market structure stronger. And this seems to be one of them, purely directed to stocks which may not have an actual volume, but which may seem active under this segment.
Okay, Moin, just for a bit, getting into the technicalities, I was reading up into the proposed specific changes that Sebi is talking about. So at least 15% of trading members should be active in all stock derivatives, or 200 members, whichever is lower. Then there's a proposed condition saying trading on minimum 75% of trading days. Then the average daily turnover on premium basis should be a minimum 150 crores, etc. Can you just take us through your thoughts on some of these specific conditions, if most of them seem absolutely par for the course, or if any of them seem a little too onerous, or maybe too porous on the other side, that it won't be effective?
So you see, I think all of them, as I mentioned, are driven towards volume. So whether a low derivative turnover, a low market interest, a narrower participation, are these vulnerable? Are these going to, lead to manipulation and, expose investors to greater risk, etc.? This is really what's being really looked at. So what they are attempting to do and what's being really proposed is to have only stocks which have a sufficient depth in the underlying cash market. They have appropriate position limits, and they are sort of not as much volatile as some of the others would be. But as I also mentioned, some of the new age stocks would be likely to enter with the participation threshold that you just mentioned of, which is the 200 and 15% trading in the last 75 days.
Moin, just stay on because we'll conversation on the recent proposed changes by Sebi for the F&O space. Moin, thanks a lot for staying on. My question to you was on the market-wide position limit aspect, and the recent proposal now says that needs to be enhanced to anywhere between 1250 to 750 crore. Now, Sebi in its consultation paper says that the turnover for the market over the last 6 years between 2018 till date has gone up by 3.5 times. But has that reflected in the stocks as well? Have they seen a proportionate increase in the average daily turnover for them to have that kind of a vision to increase it to that limit?
I think it's a very difficult question because this won't be market-wide or across all stocks. But there would be certain stocks that have seen an increase in the volume and the trading volume. And we've also seen increased participation of retail investors over the last few years. That being said, the idea, Sebi has made this reference in the paper, is to really say that therefore stocks with a good volume, with a better quality in terms of liquidity, market depth, are eligible now to be in the derivative segments and therefore can continue to be in the F&O list. I think that's the intent we really have.
Sure. Okay, we have more footage coming in. More ministers, of course. Okay, there's
Shivraj Singh Chauhan taking charge.
Yeah, there's a puja happening, I think.
Yeah.
He's starting his day or his stint off with a small prayer there.
Yep.
So Mr. Shivraj Singh Chauhan takes over the important charge of agriculture and rural affairs and rural development. And of course, that's an important, very, very important portfolio. And I suppose if you look at the discourse around it, his success in Madhya Pradesh and perhaps the connect with the grassroots level voter is something that the government will look to capitalize on in Modi 3.0 as well. So that's all the action in New Delhi. Moin, just very quickly to come back and round up our conversation before we let you go. My simple point is this: a lot of the norms that are being proposed right now, they seem overall, healthy regulation and regulation coming of age for the F&O market. Does it at all come back to that point that Sebi was making, that 90% of the retail people, or in general, 90% of the investors, they lose their money in the F&O market? I mean, from whatever you've said, none of these norms seem to imply to me that this will curb retail participation in F&O, because like you mentioned, for all you know, a lot of the new age stocks like Zomato, etc., they could actually be finding a place in the F&O market. So there are no curbs that Sebi is proposing.
So I think the approach doesn't seem to be to stop retail investors from participation. We've seen increased interest amongst retail investors. The interest will continue to increase. We've seen an all-time bull market for a reasonably long time now. I think Sebi as a regulator wants to let the opportunity be available, but put measures in place. And also, as you rightly said, expand it for new age stocks, which will create an opportunity in this segment. In terms of losing money in the market, there are other measures of investor education, etc. But one cannot take away an opportunity. And if you're thinking of a threshold or eligibility to come only as an institutional investor, that's not something that's on the cards at the moment.
Moin, take a moment to thank you for joining in and sharing in your views on this consultation paper issued by Sebi on stocks being included from the F&O space there. Moin Ladha from Khaitan Co. But meanwhile,